Ladies and gentlemen, it is okay to be wrong. It is okay if an investment turns on you. Do not chase good money after bad money. And that is the problem that's happening. And a lot of YouTubers are still It is official. The investor has lost their mind. Not only have they lost their mind, they're officially drunk on the 10x stocks, or the stocks that were supposed to be 10x. The only thing I can equate this to is a zombie movie and or just another .com bubble. What I realized is it's more like a cult-like following with a lot of these stocks. You know, I do videos on a lot of different companies, Palantir being one of them, and I guess when people didn't like the fact that it was trading around $25 and $30 and I gave it roughly a $7 to $8 price target, I was called an idiot. And that I should really be listening to Amit and Tom Nash. So I listened to Tom Nash's videos, who was really recommend buying the stock in the 20s and even the high teens, and I just couldn't get behind it. The evaluations that I ran were conservative and built safety and reason within my analysis, but that wasn't good enough for people and they disliked my video, and I still said, to me, it's a $7 to $8 stock, but you need to know what they do. So I went back to Tom Nash and I listened to what they do. I already know what they do. They dilute and they burn capital, and that's usually a recipe for disaster. And so now my $7 to $8 price target has recently been bumped down to $6, and I think I'm being pretty generous about this. I was told I'm a frigging idiot. It is never getting to that level. Well, fortunately for me, it did get down to $6 today, $6.89, and actually the 52-week low is $6.44. That's about where I would recommend this stock, not where the 52-week high is, where some of your favorite YouTubers have been pumping it. Then there was this company called Tattooed Chef, which I went to the store, I tried their products, and thought there was nothing wrong with them. The taste was good, and they were higher protein, lower calorie type foods, which I look for. After they reported quarterly earnings, a year ago, I got the heck out of the way, bought at 13, sold at 16, was called a complete moron for making that move, and that I should watch Jeremy from Financial Education, as this is a 10x stock that I'm selling, and I'm a complete moron for doing so. Well, I sold at 16, and currently the stock is at $4.36. 52-week low on this one is $3.90. It did hit a 52-week high of 19. Unfortunately, I wasn't that good to call the top on this one. So where am I going with all of this talk? Well, first, if somebody makes a video and you dislike it or have something mean to say, are you acting on emotion because you're being biased, or are you really open to the idea that this investment could go the wrong way? My most accurate videos on YouTube are the most hated videos. Go take a look at all my Tesla videos when I said Tesla was going to get cut in half due to valuations and the macro backdrop. What has happened? Tesla went from $400 a share and is currently trading at $198, $197 as I speak, completely cut in half, and I did short this position. I actually went long healthcare and shorted Tesla. Ladies and gentlemen, it is okay to be wrong. It is okay if an investment turns on you. Do not chase good money after bad money, and that is the problem that's happening, and a lot of YouTubers are still pumping this stock. Instead of saying, wait a minute, let's wait for these companies to really cash flow and pay down debt and do the right things, that's not what people do. They tell you to jump on it. It's 10x. You're going to get FOMO. And therefore, you make irrational decisions. And when somebody has a contrasting opinion, you shit on them. And that's not the right thing to do. Make sure you're open-minded both to the bull case and the bear case, as a lot of these companies are not making money, and there is a lot of risk with that. On top of it all, if a YouTuber is using astronomical growth rates in a contraction period of an economic cycle, when we could be heading in a recession, you might want to pump the brakes a little bit and lower your expectations. Build some safety in your analysis. What is so wrong with that? Guys, I build so much safety in my analysis that most of the time, my price targets never get to where I want them to be. To me, with the human behavior, with irrational capital chasing unprofitable companies, there is only one comparison that you can compare this to, and it is the dot-com bubble all over again, except it's a SPAC. And now SPACs have been around for a long period of time, but they recently have come to life with the flushing of stimulus. The faster that the 1%ers can get companies to market quicker, the faster they can take money from you, the middle class. And that is exactly what happened during the dot-com bubble. This video was made almost 6 months ago when the S&P 500 was trading just around 4,400, about 43.48. But as you can see, that was a down day and it actually opened up around 4,400. We are far removed from these prices, but guess who called that break in trend and said we are going to head into a recession, and this is a dot-com bubble? None other than yours truly, Financially Fit. Now, I don't want a pat on the back. I really don't even care who likes this and who doesn't like it. What I'm trying to do is prove a point that the emotional behavior that is behind this market is very concerning and is only going to end in one way, and that is for people to go broke because they are too emotional and don't look at the fundamentals anymore. What does that sound like? It's just another dot-com happening right before our eyes. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.